Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right.
Hey there, Bruce.
Bruce
Monday, man.
Woodburn. Boy, I never have anybody announce me. Not even the cat when I come in the door announces my name like that. Right? It's like when your kids were like 4 and 5, they just wait at the door for daddy to come home.
Oh,
Now
yeah.
I come home and it's like, are you going to make a drink? I'm going to make it.
Well, yeah. But hey, man, I'm proud. I'm proud to announce you every time we get together.
I love it, baby. I love it. I love working with you. Hey, let's get down to business because you know what? We're really in the midst of tax season, right? So now's the time. It's time to get your taxes done. I mean, everybody should have filed, but there's a lot of extensions out there right now. Let's face it.
I haven't paid taxes, or I haven't filed taxes in April in more than a decade. I
Well,
extend every time.
we can talk about that after the show. Okay. But for all of the self-employed people, most of them file extensions.
Yeah.
I personally don't. I like to get my taxes done early. I got all my corporate stuff taken care of, but I do that because I have a wife that is amazing at taking care of those things. And we get our information to our accountant early. But I wanted to tell you because, you know, self-employed people have got the ability through the channels through the IRS tax code to be able to write off certain things and
Mhm.
and decrease the amount of taxable income that they pay taxes on, right? So,
Exactly.
all right, and these are all, I mean, they're supposed to be using all legitimate, let's say, loopholes.
Let's assume they're using all legitimate um, tax code. They're not
Okay.
gaming.
So and here's the thing. Let's just say we take a couple and let's just use even numbers. Let's just say, they generate about 500 grand a year in income, but they only show that they make 100 grand. Okay. So they're writing off $400,000 worth of that otherwise would have been taxable.
Right.
Okay.
Right.
And then
Usually that's mostly through depreciation.
could be any number of things, but
Yeah.
I want to get to a point here because they come to a bank or a mortgage company and they're like, well, I want to buy a $500,000 house. But the $100,000 doesn't qualify them for that because they've got cars and credit cards.
They've got all the other stuff,
They
right?
got everything else that everybody else has, right? So they're like, wow, we don't qualify for a $500,000 house.
By
So,
the way, we run into this a lot where
so,
people like, I make all this money. Why can't I buy a house, right?
so we've got the heartbeat of America, which are self-employed people, and I believe that wholeheartedly. These are the people that really keep things moving. Um, and they're your friends and neighbors. So they're local businesses generally working in our community, which are big, but they don't show the income um, for legitimate reasons. But then they don't qualify to buy what they want to buy. They've got the
Well,
credit, they've got the cash, but they don't show the income.
they don't
So,
they don't qualify with a regular bank
so
program,
I
right?
want to talk about our bank statement program,
Mhm.
which is where the self-employed person supplies me with the last 12 or 24 months worth of business bank statements. I analyze the bank statements, I add up all the deposits, and I will use 50% of those deposits as income. So let's just say your business does 40 grand a month in revenue. I will use $20,000 a month in income, right? So now there's a price to pay for that. What do you think that price is?
I'm going to guess it costs more to originate and it's a higher interest rate.
It costs a little bit more to originate in terms of any points or loan fees,
Hmm.
and it costs generally about a point to a point and a half higher in interest rate. So that sounds pretty substantial, right?
It
So
does.
you may go from a 7% rate to, let's just say, an 8 or an 8.5. So let's
Mhm.
just say on the high side it's 8.5%. So that's
Okay.
1.5% difference in spread in interest rate. On $100,000, that's $1,500 more per year. On $500,000, it's $7,500 more in interest per year.
Per year. Okay.
7,500. So that seems like a lot of money, but let's just put this in perspective. If you made 500 grand and you only reported 100, then you saved tax dollars on $400,000. Does that
Mhm.
make sense?
Yep.
You saved $80,000 in tax. If you're only taxed at 20%, you saved 80 grand.
Right.
That's a $72,500 difference in savings. So you want to buy a home, you got your 20% to put down or more, then put the money down, pay a little higher interest rate. It's really nothing in the grand scheme of things. And rather than fixing it and paying the taxes, just settle with a little bit higher rate. It
Mhm.
still is saving you $72,500 a year if you would have made 500 grand. So
That's a great deal, and it's I do know a lot of people are very sensitive about interest rates, right? So we got to help them understand the logic of it's okay to pay a little bit more as long as your net saving somewhere else is makes it make sense, right? If it didn't cost you anything, you're definitely better off going the traditional route and getting a 7% rate, but why pay 80 grand in taxes when you can pay $7,500 in interest?
right. So I want to segue into one other program that we came up with at CrossCountry Mortgage that I think is pretty unique. So if you're a 1099, you're still self-employed, right? You're
Mhm.
1099. You're self-employed. But a lot of 1099 people may be paid from the same one company. That's just one company. But it doesn't really matter. Self-employed 1099 people were treated the same way as self-employed. You had to have 2 years average, and then we would look at your tax returns and average that income. Or we could do a bank statement program that we just talked about. But we just came up with a new one that to me is untouchable. And that is I will take your 1099s and I will give you 90% of what you show on a 1099 as income. 90%. Now you and I both know you're only showing me on your tax returns 20 or 25% at best. I'll give you 90%. So
Wow.
now you don't have to worry about that anymore. So it just gives self-employed people a world of opportunities that they otherwise would not have had.
So
So
is that still a bank statement program? And does it
no,
still
it's a 1099 program. So it's
right? But does it
we don't.
cost me a higher rate?
It'll cost you a little bit higher rate, similar to what a bank statement program
Okay.
would cost you.
Okay.
Yes.
All right.
Yes, similar to
So
what
it's not
similar to what a DSCR would cost for self-employed people as well.
right.
So these
Okay.
are all alternative programs, but they're for people that don't want to show the money on their taxes. Well, to me, that's smart because if you put the pencil to it, you're better off to take the write-offs, pay a little bit higher. Now remember, you're not going to get a 5% down conventional loan on a bank
Right.
statement
Right.
program or a 1099
You've got to
program.
have cash.
You got to have a little bit more down payment.
Yep.
But still, it allows you should have more payment. You're saving $80,000 a year. You should have plenty of more payment, right?
Hey, you know what? Speaking of money, and I'll use this to wrap up. I like to remind people that they need to homestead when they buy a house because I ran into this couple recently. They bought a house in 2012. They paid about 180 grand for it. The original valuation from the county was 173. They
Yes.
forgot to homestead or they didn't know to homestead their
Whoa.
house in 2012. Okay. It cost them an extra $100 the next year because they didn't do it. The next year after that, it was 300, then 600. That's each year, right?
Right.
Today, it's costing them nearly $2,000 more just this year. And in aggregate, over the last 12 years, it's cost them almost 11,000. Okay. But worse than that, it's going to continue to cost them money. Even if they fix it today, they're still paying the higher. They don't drop it all the way back down to the 180 number.
Nope.
It just caps it starting today at 3%, right?
That's right.
But worse than that is that
Affordability.
Florida has the portability where if I sell a house, I get to move the savings from one house to my next house. They lost all that too.
Yes, they
So
did.
over their lives, assuming they stay in Florida and assuming they continue to own a home, it's probably going to cost them $40,000 or $50,000 to have made this one mistake back in 2012 of not doing homestead.
And it's
So
so easy. You just go to your county and you send them a copy of your utility bill and your deed, show them that you live in the house as a primary residence, and it's done. And
the
you
whole
only have
thing,
to
the
do
whole
it
thing
one
takes
time.
15 minutes. The whole thing takes 15
And
minutes.
you do it one time. You don't have to do it every
Nope.
year.
One time. That's it. One time. Every year you'll get a notice. Are you still homesteaded? That's it, right?
Yeah,
I mean, no big deal. You don't have to answer it. As long as you don't answer it, they assume you're still homesteaded. You're
that's
good to
right.
go.
That's right.
So I harp on people all the time. I don't like to leave things to chance. So I will send a text, I will send an email, but I physically call all of my buyers 30 days after they buy, in
And
November
remind them.
again, and in January again, because you have until March of the following year when you buy.
Yeah, they give you plenty of room.
Plenty of time. Plenty of time. So anyway, that's my story for today. We're a little bit over time, so we're going to go ahead and get going. But I hope you have a great week.
And anybody out there that has any questions for Tom or I, feel free to give us a call. If you're in real estate, you're in mortgages, you're considering buying or selling a home, we can help you in all 50 states. And we're here, and we'd love to be here as a resource for you. I hope you're enjoying the show. Have a great day,
Absolutely.
Tom.